Hello, everyone, and welcome back to yet another episode on the Automated Velocity channel where we take velocity banking and we automate it. Listen, today we're going to go ahead and get into what if you have multiple rental properties? How are you supposed to keep track of all of that? And can you? Is it possible to still be able to do velocity banking on all of those properties without having to get yourself a pen and some paper and do all those calculations yourself? We're going to see if that's possible with the Money Max account. But before we get into that, go ahead and like, share, and subscribe so that everyone around the world and possibly the universe can know how powerful automated velocity banking is. So here we have John and Rebecca, okay? And they have an action plan. This is so powerful. They have an action plan, a plan in which they know day by day what they're supposed to do with their money. It's going to be every month. They have a 90-day plan. I mean, it's 90 days out. And when next month rolls around, guess what? Another month will be added so they know where their money goes in order to pay down all of their debts very, very quickly. Now, we want to run through what's going on in this person's life, right? In this couple's life. We want to look at the rental incomes that they have. Now, keep in mind, they still have jobs, okay? And the amount of rental incomes that they are allowed to have, okay, is going to be quite shocking to you. So let's go ahead and get into it. So let's go ahead and address the question. Well, CJ, when you have, let's say 10 mortgages, because that's what you're allowed to have under one name, right? You got the 10 mortgages. But what about if you wanted more than 10? Can you utilize somebody else's name? Can you do a subject to? Of course. But that's another subject for another day. Do you have to use velocity banking when there's that much income coming in? I mean, you are cash flowing very positively. And so, do you even need it? Well, let me direct your attention, right, to the amount of interest that they're going to be saving. Let's go ahead and direct your attention there. Okay. $1,372,977 saved. Okay. And they're actually going to be saving over $1 million in interest. So do you have to utilize velocity banking? Do you have to have a system to do this when you have that much cash flow? No, you don't have to, right? But look at how much you're leaving on the table when you don't know how to allocate your finances. You don't have a system that helps you in cash flowing positively and effectively. All right. So let's just think about that as well. As far as the rentals go, let's go ahead and look at them. Okay, because they got 10. Okay, 10 mortgages, and so of course one of them they live in. Look at the checking account. They only got $500 in there. The savings, they got a bit more, $5,138. Look at the assets and properties, and you may be thinking, man, that's not me. But it can be, is what we want to focus on. Over 2.9 million in assets. These are properties that pay them. Okay, first mortgage value, we got 2.942 million. We do still have the credit card, right? $2,000 there. And we have the 10 mortgages, all right? Now look at all of these mortgages. Look at this. There's different interest rates on them. 4, there's 6, there's 5, 4.13, 3, 5, 4.5, 6.5, 8.6, right? So we have all these different mortgages, and actually the last one is a home equity line of credit. And how are we supposed to keep up with all of that? Right here. Now let's go ahead and go into their budget and see that they still have a job, right? $6,000 each month that they have. The rental incomes is $15,000. And you know what? They get annual bonuses. Now, those bonuses, right, are annual. Very important to realize because it's not monthly. So, listen, what's the difference between this and you? Because you can do this and you can even do more than this. Does that make sense? Look at the rental income that is coming in, and I also want to direct your attention to this right here. Look at how much cash flow. This is where it's at right here. Their average discretionary income is $3,224.82. Do you think you could be paying down debt with that much cash flow? Absolutely, right? Many times we see there is a relationship between how much cash flow you have and how fast you can eliminate unnecessary debt. And so let's just go through what they have, right? We do have bills and utilities, of course, the food and dining, auto and transportation, right? Of course, we have all of those mortgages there as well. But not only that, we're knowing how to pay them. We know how to pay each and every one. How? Through a system that helps us. Now, the question may come across, and you may ask yourself, well, I mean, how long is it going to take somebody to pay off not only 10 mortgages, but I mean, the credit card, how long is it going to take people? 20 years. 20 years. Not for one mortgage, for 10. Oh, and by the way, a Visa card. So people are paying off their mortgages, just one mortgage in 30 years. These people are able to pay off 10 mortgages and a Visa card in under 30 years, 20 years. Do you see how powerful it is? Are you seeing that? So I just wanted to bring this to your attention because many times we think small. Many times we think, man, that's for that person. I'm not really organized. Do you have to be organized when you have a system that helps you in your organization? Now, does it help to be organized? Sure, it does. But why not start right now? If you're making $6,000, even $5,000 a month, why not start venturing out? Why not start talking to us, for example? Start talking to your lenders and saying, listen, I really want to have a rental incomes. Could you help me out? Why not utilize that good credit score? Why not utilize a First-Lien HELOC and see what you can do with what you have? I want you to take a look at this one more time. Look at how much property. Look at how many properties this couple has, John and Rebecca. This can be you, okay? And look at when they're going to pay it off. 20 years. Okay? They already have a debt-free date. And that's July 1st, 2043. They don't have to use automated velocity banking, but look at how much interest they're going to be saving when they do. $1,372,977. Does that make sense? Okay. Their monthly income, most of it comes from the rentals. Do they have to have a job anymore? Do they? It helps, doesn't it? Monthly expenses is 18. So do they have to work as much as well? Or can they take a few days off? Can they afford it? You answer that, okay? And so their average discretionary income's over $3,000, and they're going to be making so many great moves. And listen, can they add another subject to onto that, right? A subject to. Do you know what a subject to is? All right. Listen, we can get into that later. This video is just about what you can do as a person that is, just wanted to get into real estate. This is why people love real estate right here, right here. Okay. Now, they don't like not knowing what to do, not having a plan. But if you have the plan, look at what's possible. All right. Folks, thank you so much for joining us on this video. Listen, we got plenty more, and I want you to have a great day. And if you have questions about any of this, if you have questions about a first lien HELOC, if you have questions about how can I get hooked up with the Money Max account right now, contact us. All right. We're going to say good night and have a great day. God bless you, and we'll see you in the next video.